Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this mediocre Wednesday with a little bit of rain and a little bit of sun, quite mixed to be honest. I hope you all had a great trading week so far. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions and make your own decisions. And besides that, all the tools that I'm using during this live stream / video are linked in the video description down below. And one thing I always want to point out is the Elliott Wave principle, the strategy that I'm trying to follow as best as I can, is the one thing you can actually read online for free when you're using the link in the description down below. That said, don't forget, like, subscribe, and enable notifications so you don't miss out on future episodes. And with that, we can jump directly into the markets. Now we see that we have a slightly green start into the day. And basically what's going to be interesting the next couple of days and weeks should be GameStop. We're going to zoom out a little bit here. I know it looks a little bit chaotic. I recommend you check out some older episodes as well if you're curious about the overall labeling. Overall, right now, we're getting closer to a stronger push upwards, which then potentially, most likely actually brings us in the situation where we are right now in wave 1, 2, and are expecting that this will be wave 3. The wave 3 target, the first one, would be between $33.74 and around $36 per share. Potentially we could reach a higher target because this third wave also has to subdivide into 1, 2, 3, 4, 5. And if we zoom in a little bit, so just to clarify, we're looking at this area here. So from this low further, so if we zoom in to, 8 hours for now for the start, then we can see basically that potentially, again, this is wave 1, 2, and we're in the third wave that should have the targets around the $30 mark, which means then this is the next wave 1, 2 within that third wave. And then this wave 1, 2, then we have the retracement that we don't need anymore since we made a new high now, which means we can actually add an expansion high. Good afternoon. Not good morning, but good afternoon, Olga. So we can add an extension here to get our wave 3 targets for that third wave within the third wave. Now I'm gonna remove a few things for now, so like this, and we can remove this since we already passed that point. That's the corrective pattern that we talked about yesterday and potentially Monday, if I'm not mistaken. Which gives us a third wave target overall at just have to highlight that and maybe close the window because there's a little wind. So up here. So we actually see that the third wave target for this wave 1, 2 would already potentially be in the area. I mean, the first one would be here, 26 to 28, but the most likely one would be 33 to 35, which means if that were the case and we get a 1, 2, 3, 4, 5, then the third wave target here would actually not be this one anymore, 33 to 36, but would automatically become the next one in the area of 44 to 47, which obviously would be an incredible increase considering that we are looking at the 8-hour chart only. So we're still talking about days or weeks for it to play out. But if that pattern becomes reality or holds true, then we are up for, or then we're in for quite some upside here. Now, if we look closer, if we look closer, might even go on an hourly chart here. So just for the upwards movement. So again, we have this wave 1, 2, and again, just to confirm. So first of all, our retracement in wave 2 turns around the 50% retracement level, gets close to the 61.8. So very often when we have an impulsive wave move, and then the corrective pattern will very often turn around at 38.2, 61.8. If not at those levels, then the 50% level, or sometimes the 78.6. If it doesn't turn around at those levels, it happens, but rarely, and very often it indicates that our labeling might be wrong. Or it's just one of the few exceptions where we, just turn around, for example, here, or maybe only here. Anyway, so that's the first thing. Second thing that we already covered is this corrective wave here that should subdivide either in a combination of corrective patterns or into a simple zigzag ABC pattern, which means we have 5 waves, 3 waves, 5 waves. which we probably, or that we probably could label if we look even closer, but at some point it gets, the picture gets too cluttered to actually really be sure. However, what we can do is we can use expansion. So if we take our wave A, wave B, expansion, then the minimum target for wave C would be the 61.8 expansion level, and the actual desired target for a perfect zigzag would be when wave C is identical to wave A in terms of movement, which means the 100% level, which we reached here by plus minus 2 cents. So quite accurately, which makes me quite confident in the assumption that we indeed have wave 1, wave 2, and are now in that third subwave, so of that bigger wave pattern, impulsive wave pattern here. Now, if that's the case, then again, the next wave here, so this movement here also has to subdivide accordingly, which means we'll have wave 1, which probably is in some form 1, 2, 3, 4, 5, so to here. And then we have again 1, 2, and are in the third wave. The third wave, as said, very often usually turns around at a 3.38.2 or 61.8 extension level, or a multiple of that. So 138.2, 161.8, 238.2, 261.8, 300, and so on. And in most cases, in my experience, it's the 261.8 level that indicates the end of a third wave. Which means potentially we actually finished our third wave here, which would give us, or which would mean potentially we have 1, 2, 3. That third wave would be a little bit hard to sublabel, to be honest, because obviously we have that huge spike. So that would need to be in some form 1, 2, 3, 4, 5, which still kind of fits. Nah, that wouldn't work because we would violate a lot of rules here. So because we are entering the territory of wave 2 and so on. So there is potentially more upwards movement, and this third wave here might actually still go to this area. Doesn't mean that we could not short term, again, we're looking at an hourly chart, develop another corrective pattern, but it does mean that if that third wave isn't finished yet, that we, for example, shouldn't go lower than 23.01 here. So to play out a corrective pattern before we get another push up that finishes this potential third wave. Yeah, and then from there, we'll get our potential wave 4 and our wave 5. So I'm going to reset the zoom here. It's going to be interesting to watch, but again, like maybe this week might not be as explosive, but over the next couple of weeks, there should be quite strong movements, which should potentially, if it plays out exactly like that, should be great for my positions, because we might get this week's calls that expire on Friday to expire worthless, and however, then be able to sell higher strike price calls with a higher premium, considering a potentially increased volatility. Now let's switch here to GameStop and, for example, enable the weeklies. So we have 20 would be the next. Let's actually look at it, how it would work out in theory right now if we would already roll those options. So we have right now 3 $30 call options that we've written. So we would have to buy them back. So that's 3 pieces of those, 3, not 13. Hi Akashi, great to have you here. Yeah, sorry that you were late. I mean, sorry that you missed the morning stream, but great to have you here. How is your week going? Yeah, so we have 3 $30 strike price call options that we're buying back, or that we would buy back, and 2 $35. And then on the other hand, for next week, we could sell, let's see how the premium is. If we, for example, sell 5, so 2 that we buy back, and let's say we sell 5 total. We don't have premiums for everything apparently, because we don't get a mid. What doesn't have a, no, there are premiums, and there are also premiums. So why do we not get a mid price here? So theoretically, we could net $160 premium and actually move up the expected, or the strike price for the free $30 calls, although we extend everything for a week. We should wait. I mean, it's a little tricky because on one hand, upwards movement makes those here more expensive to buy back, but it also increases the premium that we can receive for selling the new ones. However, since we're selling for higher strike prices, that might not compensate that much. Now we get a mid price, so we could do that for $150 premium. And if GameStop shoots about 35, it would also secure us a $1,500 extra profit on those 300 shares that we have here. And yeah, it's probably not worth doing right now. So we're going to have to zoom out a little bit and get a better idea. So our assumption would be that potentially we will not turn around at the 2618, but actually, okay, let's take it small. So here we have this one, and this one we currently finish 3-4. Yeah, so or we actually expect to go here in the 26 area. However, then here for this one, we already have the 35 area, which means for the bigger one, we actually would expect the 47 area, which is a little bit tricky because if we were to say here, we sell the, yeah, 45 is even the highest, yeah. And here, oh no, there we have 35. So 35, and here we have basically, we expect the bounce at the 47 area. So if we switch that one here to 48, we probably don't get enough premium. Yeah, we actually would have to pay then. So buying those back would cost us more than what we get in premium, because the 48 one here we can see has $35, $40 premium. So that's not something that we want to play like this. So I think the play here will actually be to hope that we're right. That's obviously the first assumption, or the first thing that we need here, to be right. The second thing then, that we get our $30 and $35 call options expiring worthless this week. And then next week that we actually do not sell options, or if the pattern starts to play out the way I think it will. And so if the pattern starts to play out the way I think it will, as we just covered, then the smartest play would be, as said, if I'm not mistaken, to let our current call options expire worthless, and then next week actually wait for it to hit the corresponding 261 level, and at that point sell a call, because from there we should get the maximum premium, and from there the price should then bounce, which means the cost for the option gets reduced and we can buy it back cheaper. Yeah, so in other words, still a waiting game, but a very, very nice waiting game at the moment, although chart is set a little bit cluttered. I'm gonna change that this one here is only visible on sorry, so 4 hours. That one should only be visible on hourly, okay. So visibility, visible on current bar size or lower. Okay, then that one can be visible on 4 hours. On current bar size or lower. And that one can also be visible on the daily or not. It gets a little cluttered, so up again. Visibility, we have to zoom in again, so 8 hours. Or lower, so that if we look on daily, it actually, there's still some things cluttering stuff up, so that one should also zoom in 8 hours. We get rid of that one, but we still have to get rid of that one. Visibility on this one or lower. So on the daily chart, we get actually a little bit of a cleaner picture. Yeah. Although that one is actually fine. That one we still need here. That one we can zoom further back, and that one we can also zoom further back for now. So let's like this, yeah. Okay, so cleaned it up and covered GameStop with that. Olga says went in and out of WHLR. I already forgot what that was, but we looked at it last time in it. WHLR, and you made a decent exit.
Real estate.
Yeah, real estate. So my lovely wife that's not streaming and just listening passively has a better recollection of the individual stocks that I have than I have. Yeah, we covered it last time, so that most likely we even had to add some extensions, but most likely we have 1, 2, 3, 4, 5. So up to, so wave 3 finishes here, and then which was like the 1100 or something like that. Then we have our expansion. So if that is wave 4 and our wave 3 starts here, we reach the minimum target for wave 5. And then we're actually expecting a retracement down to at least the 38.2 retracement level that plays out as A, B, C. So we didn't get, it could be that we potentially have our A, B, C already finished here. And again, not always we will reach that level. It's just the most common one. But from the looks of it right now, I would still, trend line, I would still stay out of it, or at least not long. Oh, there we already have a breakout from this. Okay. Zoom in. Do we? Fibonacci's are really a powerful tool. Okay, it's tricky. We went that low here. Hourly. Up. I actually would expect further move down. So here we retrace. Now, actually two options. So one option is this is the entire correction, and we are forming the next impulsive pattern. So 1, 2, 3. Or the correction hasn't finished yet. And basically we're still getting A, B, C, or it's a combinative corrective pattern where we have an A, B, C down here, a wave X, and another A, B, C, or something similar forming here, in which case, yeah, so we would have the minimum target here, and so yeah, like right now I probably, so cool that you made a killing here, a nice profit. But I right now probably still expect a retracement down either to the 38.2 or 50%. I don't test my guts any further from here. Yeah, like yeah, often better like to not get greedy. Yeah, so I think we might get still another retracement here to the 38.2 or 50% retracement, at which point it may or may not make sense to, again, this movement here could mark the end of the downwards trend and could mark the beginning of an impulsive wave up, in which case those areas here would be potentially good entry points. And yeah, but the stop loss would need to be down at the low, so it's like a lot of risk for no fixed reward level at this point. So there are better things out there, I think, right now. So if we consider GameStop, as said, has a very bullish pattern at the moment. Novavax is something that I'm still thinking has a very bullish pattern. But yeah, moving on to check through the rest. Starting with, actually, since we mentioned it, Novavax. We finally broke out from that deceleration channel. Question is, will we stay above? If yes, then this should mark, as said, if we move up or zoom out, probably a weekly chart, I think. Yeah, it's a little cluttered here, but basically 1, 2, 3, 4, 5, and the way 5 target areas. Why? So Olga says, remember, Novavax is basically linked to GameStop. Either one makes a move, the other follows. I never noticed, to be honest. Yeah. So any other correlation other than that the charts move similar? Do they even move similar? I don't think so. Or maybe, yeah, like. I don't see much similarity, to be honest. Yeah. So there might be some recent correlation in price movement, but I'm for example, in GameStop on the weekly chart, I don't see such a clear 1, 2, 3, 4, 5 pattern. So like might be some correlation, but honestly, I don't see it right now here. Yeah. Anyway, so in Novavax, we have what I see, or in my opinion, 1, 2, 3, 4, and still wave 5 to expect. If we work our way in, I know it's a little bit cluttered. We thought that this will be wave A, B, C for the corrective pattern that reaches the minimum target for wave C, but not the maximum target, but still is a relatively nice corrective pattern. And we therefore should have finished the correction here and should now be in wave 5 up to terminate between $29 and $60 per share in the next couple of Yeah, I will check that in a second. Yeah, in the next couple of months. Now, for the first time, we have our breakout from the so-called deceleration channel when we use Kennedy's channeling technique. And if we zoom in closer, so let's finish the close-up first. Okay, 1 hour is a little jump too far, so 8 hours. So we have the low point, we have a potential wave 1 up, wave 2 down, and should or could potentially be now in our next 5-wave impulse up. And yeah, now we can go to hourly, I guess. Here we have also a relatively nice 1, 2, 3, 4, 5. The correction is not so nice to label, to be honest, but potentially correcting down here and getting the next 1, 2, 3, 4, and wave 5 up. So while we still have to wait a little bit to actually have our absolute confirmation, so far it looks promising that it will play out as expected and that it will go up from here. In my opinion, observation, zoom out 2 to 5 years, even 1 year is clearly visible. So if we look on a weekly chart, that's already back to, yeah. So if we go here, back to, I don't know, like from 2020, yeah. And then we go GameStop, weekly, back to, so wait, here we have Novavax, December 2020, upwards move till February 21. So the whole, December 2020, yeah, so the whole 2021 year is upwards move, whereas in GameStop, the whole 2021 year is also an upwards move. Okay, but no, like GameStop started moving months earlier. Oh, wait, December 20, God. It's not, I don't know, I don't think it's obvious. So I mean, we have from December basically 21 bullish, yeah, and then here we basically go down till February 24, and in GameStop, and we go down from February or September 21. So February to September was sideways. Yeah, February. Yeah, I mean, there we had the sneeze and buy button removal, blah, 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 to September. Yeah, I mean, I wouldn't call that, I mean, with the dip here and considering that the dip is based on the buy button removal, I wouldn't necessarily call that the same movement, yeah. But yeah, similar, there is a similarity, yeah, so. I don't see, no, like before, so while from 2020 or beginning of 21, one can argue that the movement is similar, but we can also see how far more Novavax lost again of what it gained here. Before that, we can basically see that Novavax was just moving sideways, but basically like a big expanding triangle. So like A, B, C, D, E, yeah, so like a big expanding triangle. So we have the top here that it couldn't break, but we have lower lows developing, whereas GameStop in comparison had like basically, yeah, like actually managed to break the highs here. And so the pattern here is quite different. I don't know, where does Novavax start? So that's also obviously a difference, yeah. So 2003, no, like 96, okay, so. And GameStop, we have history since 2002. Okay, from 2002 up for 6 years. Novavax, 2002, sideways and down, yeah, or sideways, yeah. So I don't see a similarity there. There might be similarity in the movements now. But again, I also don't think it's even remotely as clear because like even without, I don't know, like spending some time looking into Elliott Wave Theory, it's with the naked eye, one can recognize here 1, 2, 3, and A, B, C is a very nice pattern for wave 4. Whereas on GameStop, and that's from February, so whereas in GameStop, if we look on a weekly chart from February, the pattern is by far not that clear. So, I mean, first of all, it starts later because in February it was still going down. And then second of all, we can see that it's not visually by far not as clear a 1, 2, 3, 4, 5 or any kind of pattern. If at all, the only clear thing we can see on a weekly chart here would be potential A, B, C movement down here. But yeah, so yeah, I mean, you can try to share it. I'm not sure if it goes through or not, to be honest. Yeah. So, yeah. So I don't see that similarity. Yeah. Zooming in here again, and there we actually can now zoom in further. Yeah, we were on the 4 or 8 hour chart. 8 hours seems reasonable. Now, come on. So like this, and Novavax. We can also move in further and basically, yeah, like focus on the most recent movement. So, but in Novavax, I think the pattern, or I mean, the last couple of days in both, it's clearer, but in Novavax, it was already relatively clear here that it looked like a very neat corrective pattern that's finished. Whereas in GameStop, for the last couple of weeks, I pretty much pointed out in every episode that there is still the variant that it might go further down because the pattern is not as clear. So there might be some similarity, but if we look, I don't know, like, yeah, GameStop is up today, almost 1%. Novavax is down almost 1.5. So I'm not sure how related they move, but I fail to see how they should be connected. Maybe there is a connection, but yeah, like, so to me, the charts look different. Yeah, but that's anyway, like in the, I don't know, like everybody has a different pattern recognition, so you might be able to see something that I just can't see. Yeah. While we're waiting for you to maybe be able to share the Google Finance comparison, we're moving on to work our way from the top. Barnes & Noble Education Inc. So as we feared in quotes or thought there might be another further correction, we're still within the limit. So again, we usually would expect that we correct 38.2, 50 or 61.8. It's possible that this will turn into, yeah, like it's hard to see a super perfect corrective pattern here, but it's possible that we'll basically reach the 61.8 retracement level, which would correlate with the guideline in quotes that a corrective wave will very often terminate in the area of wave 4 of the previous wave of a lower degree. So that's the previous wave. The lower degree is when we subdivide this in some form as 1, 2, 3, 4, 5. And then the wave 4 area, and specifically the end of the wave 4 area, is very often where the following corrective wave will also terminate, which would align with the 61.8 retracement level here, which may or may not, again, I don't really clearly see a zigzag or any other corrective pattern here, but it may or may not align with, for example, the 161.8 extension level. Yeah. No, yeah, that's the 50%. Okay, so yeah, so we'll have to wait. I see there is potential for a little bit further downward movement, but it's also when we zoom out, yeah, too far. But daily, yeah, that fluke here is ruining the labeling. But when we zoom out, it still looks like 1, 2, 3, 4, 5. So we are now correcting in our wave 2. Potentially, so again, this might form some kind of ABC or so that should, if I'm right, finish in that area here. So between the 61.8 and the 38.2 retracement level. And then from there, we should, if I'm right, get the next impulsive pattern up. As so often, we'll have to wait and see to get confirmation. Now, Faraday futures, still, yeah, like we're still good. Like we're still expecting there to this be basically 1, 2, 3, 4, 5 corrective wave. It did not turn around at the 61.8 retracement level, so the next potential turnaround point would be at the 78.6 retracement level. If we break that, so below the $4 mark, we would start to worry that maybe the corrective pattern hasn't finished yet, but then it would be a challenge to then, because this would then have to be a corrective move. And with the naked eye, that's a clear 1, 2, 3, 4, 5 wave movement and not a 3-wave pattern. So corrective patterns always divide in threes. So 3 waves, 6 waves, 9 waves. Whereas that's clearly 1, 2, 3, 4, 5, at least to me. But yeah, so expecting it to go up we're looking at a 4-hour chart, so in the next couple of weeks to start to move upwards to develop the next wave here. But short term, there is still potential for further downside. Again, we worry if we break the 78.6, and our stop loss technically should be at 336, or if we want to consider the option that this correction hasn't finished yet, then we would need to put it at a low here at 261. If we break 261, then we don't have a valid pattern on the chart anymore, and we should get out. Yeah. Grab dropped a little bit again, if I'm not mistaken. Yeah. So yeah, I'm still long-term bullish here. So wait, green wave, do something. So we're still waiting for any kind of positive news to get this stock off the ground. Immersion. Yeah, we assume that we're done here with the correction. So we have on one hand the 61.8 retracement level. On the other hand, if this is wave A, B, C, we're at the 100% extension level. So it would not be, in my opinion, a bad entry point. Stop loss, however, would need to be at 654. So it has like 30% risk with, what's that, maybe 100% reward. So not the best risk reward ratio that we've ever seen. No, we covered a little bit, but we're still below the 30-cent mark. There's still the option, actually, because we have that spike here. So I think right now, unless it's A, B, C, so there might still be a little bit upside, but again, I still expect a push further down and actually a break below the 20-cent mark. We're looking at the weekly charts in the next couple of months. And costs, yeah. We actually assume that our correction finished here, 1, 2, 3, 4, 5 for wave C, and that we're going up from here, which means our stop loss could be theoretically here at this level at, what's the low here, at 652. And from here, theoretically, if the pattern checks out like this, we should develop a new high. Risk reward ratio here, not too bad, but however, as far as the stop loss goes, we would have to consider that this might be a bigger corrective pattern, so our stop loss would actually need to be down here. So we have like, what's that, 75% risk or so. And on the other hand, like maybe 200% upside, so risk reward ratio also not that great. Maxim, yeah, still waiting. So again, now we might have actually finished the third wave. We got very close to the 238.2 extension level. So I said, I think that this is 1, 2, or 2, yeah, 2 should finish here, and that we're currently finishing up the third wave. Then we get a wave 4 and then a wave 5. It's possible that this actually finishes wave 3. It's 1, 2, 3, 4, 5, maybe. And this is wave 4 in development, and then we'll get our wave 5 pushed down. I was now wondering why you're writing in Vietnamese or something like that. Let's check. HTTP // there you go. Okay. Well done. No, like I saw your this message, and then the next one, the one that looks like Vietnamese, and then this one. If you send anything in between, it doesn't show up anywhere, unfortunately. Yeah. Yeah, I don't know. I see partial correlation, as I mentioned, yeah, but I don't really see too much correlation here, because again, the blue line here, we can see, yes, it's following the same thing here, but while black is in that case GameStop, no, blue is GameStop, I guess, on this chart, yeah. No. Wait, how far do we go? So it's like really hard without the dates here, yeah. I mean, that's probably 2020, but considering that we have like here a longer upwards move, and here just a brief spike, and then we move sideways along. And here we actually have a downwards move while the blue stock actually gets the push up. So I just see too many areas where they don't move hand in hand, yeah. And blue is index, yeah. And then again, GameStop actually breaching the ceiling that it had, whereas NVEX didn't so far, yeah. So again, maybe there is, yeah, like they spiked at the same time. Okay, that could mean that at that time, whoever had to close their GameStop shorts or bought into GameStop or whatever, or yeah, had to close it. Now, I mean, they didn't have then an NVEX position, so. I don't know, like again, like I just don't, I mean, I see some similarity. If we look here, there's a move up, as a move up, down, and in the same area, up, down, yeah. And after that, up, down, up, down, up. So there is some similarity, but yeah, like, I don't know, for me, it's not enough to see or to say they move together, yeah. Overall, so long term. So maybe recently a little bit more. So this area here, that, yeah, or actually, yeah, that area, maybe even till here, although that's already back till, so maybe the last couple of years, there is some relation in price movement, but on the long-term history, I don't consider this being like, like moving together, considering that there are more than enough spots where one of the stocks keeps going in one direction, like blue goes further down, black gets a spike, yeah, and yeah, then here blue gets a spike, but black doesn't as much, so by far not as much, so yeah. But yeah, thanks for sharing. So yeah, I don't know, like very similar is a subjective term. For me, they are not very similar. For me, it's like, yeah, recently one could argue that the movements are relatively synchronized, but zooming out and looking at the long-term history, to me, it's not very similar, yeah. Like, but that's a subjective matter, so that's not really something to, unless we really define what does similar mean, yeah. But yeah, but you see there already see the core difference. So if we look at it, that we started on, let's say, roughly the same level, close to zero. Then you have NVEX actually rallying while GameStop does nothing. Yeah. And then if we look, GameStop lost a little bit again, of course. Yeah. But NVEX actually went back to the starting point. So there's a huge difference in that bigger picture to me. Yeah. Just the fact that in the middle area that they moved around the same time or so. I mean, yes, when GameStop was in quotes squeezing, yeah, then there had to be some kind of correlation that, I don't know, yeah, like, but long term, there'll often enough be situations in the market where a ton of stocks move similar simply because whatever, it's a panic sell-off like during COVID or so, yeah. Yeah, so like, I don't know, I just don't see it. So it might be there, and if you see it, yeah, maybe you're onto something there that they are moving together. I just don't see how they should be connected because, yeah, like if we consider GameStop, the SEC investigation came to the conclusion that retail was not the reason why the stock rallied that much. And if retail wasn't the reason, then somebody else had to be the reason. I don't know, like, yeah, I mean, you know what I mean? Yeah, now if somebody would have had or would have been short in GameStop and Novavax at the same time and got margin called at that moment, and then that could have caused the move, so they would have been forced to buy shares back in both. But yeah, that's the only thing that I can think how back then, when was it? End of January 2020 or so, yeah. That caused them to move identically, yeah. Maybe they're again shorted by the same parties and therefore have similar movements. I just don't see it on the bigger scale. Yeah? So there are areas in between in the time frames where I agree, they moved similar there. But I see areas where I think they didn't move hand in hand or even related. So yeah, like, I don't know. It's possible, of course, if somebody bets against both stocks and they have to buy back their shares in both at the same time, it would cause spikes in both at the same time. But I don't see this often enough. Yeah. Same would be if somebody opens short positions, big ones in both at the same time, it would drive down the price in both at the same time. But then in between those two moments, so between closing the shorts and opening new shorts positions, they would then move obviously relatively independently. And then if you don't close them at the same time because you're not margin called, you're not forced to close them, but you just decide to get out of a short position, and it would also move independently. And I don't know, I just don't see it on the bigger picture. Yeah, moving on, NEO, we actually broke, oh, that's cool. We broke through the 261.8 level, yeah. Which brings up the next thing. So even with the naked eye, that's wave 1, 2, and we actually are bouncing up this, likely bouncing on this 2618. So which means then our next target for this 1, 2, 3 will be the 3618 at $6. Yeah, so that's cool. So which means we likely are looking at 1, 2, and then here in the third wave that again should go now to the 3618 level. Considering that this third wave subdivides as 1, 2, 3, 4, and 5. Yeah, and then even in the subwave, I love it that sometimes the chart is so clear or relatively clear. We're gonna get rid of this one for now, but so we have basically 1, 2, and then 1, and are in this bigger third wave that again should go to that 361.8 level, and then we have wave 1, 2, and are in this third wave. So that one where we just removed the extension for, yeah. And then in that third wave, we see 1, 2. Wave 3 actually also doesn't nicely bounce here. 1, 2. Yeah, so while here on that smallest scale, we don't nicely bounce, I still think that the accurate labeling will be like this. So that we have 1, 2, and we're in the third wave up to $5.85, $6.05. And in that third wave, we have 1, 2, 3, finishing potentially here at the 2618. Getting our ABC for wave 4 and then getting our wave 5 push. We can also roughly estimate, if that assumption is correct, how far our wave 5 should go, because wave 4, because if we assume that this is the target of this entire move, then we would want to have an overlapping area, so the 61.8 to 100% overlapping with this one, yeah. And then probably, or we might actually even go higher because we would have to retrace quite a bit to make this a reality, yeah. So if we look here we retraced 50%, which is annoying because we cannot apply the rule of alternation very well. And then the third wave, right now, that would fit. So under the assumption that this third wave finished, we might correct down 10% to the $5 mark here, which is the 38.2 retracement level. And if that's the end of this corrective move, again, there's still a chance that we first go further, that this subwave actually hasn't finished yet, yeah. But if we go that low for that corrective move, then it would relatively well fit with the minimum target for that fifth wave, overlapping a little bit with the 361.8 extension level, which marks the target for the bigger third wave, yeah. And yeah, so while short term, I consider there might be a little bit of, yeah, like room down, 10% or so, give or take, worst case 20 to 450, but I don't think that's likely, considering how everything here looks on the chart. So while there might be room down, I think that we're looking at an 8-hour chart, so like, until October, we're actually expecting more upside here in NEO to actually make another 10-15% up for that third wave. Then we get a wave 4 and another wave 5. So actually quite nice. Yeah, I'm gonna have a sip. Don't forget to hydrate. PK, Park Hotels and Resorts Inc. Yeah, we're looking at a monthly chart, so that will still take time. But there is the assumption that we might have finished a corrective wave here. So either A, B, C in progress, which would be that target area here. So what's that, 200% to 500 or to 400% profit target, or that it's 1, 2, 3, in which case the target would be higher. But considering that this is a monthly chart, we're talking about a couple of years for this to play out if we're right. There's still the option that actually the correction hasn't finished yet and we go down further. One thing we can add to the chart would be the retracement to see if that correction actually turns around. Yeah, I mean, we reached the 38.2, but we don't nicely bounce. We actually make it through. So the other option would be that this is somehow A, B, C, in which case there would still be further room down to suffer before we see room up. We can see that in this case, the 61.8 target area would overlap with 50%, and the 100% target where A, B, C would be perfect would overlap here. So there is potentially 30% downside for another move to finish A, B, C like this, and the correction hasn't finished here. And then we would go up from there. Yeah, so it makes it tricky with stop loss, because technically if that correction isn't finished, then the stop loss would need to be down here where we basically have, what's that, 60-70% risk. Although the risk reward ratio to, yeah, I mean, the target areas also change then if we go further down. So yeah, probably something to stay out, but looking at it, I think that, yeah, like, I don't know, I mean, it's a long time. Within the next 6 years or so, we should see a new high. Yeah. Moving on, Riot. Will we get a chart? Usually we don't. Okay, Olga. Thanks for stopping by. Thanks for sharing all your insights, and have a great day. See you tomorrow, maybe. Okay, not loading. SMCI. There we were waiting for another push down to finish wave 5. Now we actually had that push. It could be that we still, I mean, that would be the perfect turnaround. We have wave A, wave B, wave C, and our maximum wave C target is 380.88, and we went down to 382.80. So we got within $2.08 of the exact target. While at the same time, for this subwave here, we labeled 1, 2, 3, 4, and 5, and the minimum target area from here for that fifth wave would be 403, and we also broke that. So potentially SMCI may have finished the corrective pattern, although it did not reach the 38.2 retracement. Yeah, that's something to keep in mind. But it may have, we can however double check, maybe we're retracing not the full pattern, but only a part of it. If we're retracing only or correcting only this. Yeah, also not perfectly nice on the 61.8 level, but that might be an option. So maybe we're not correcting the full history, but just this movement here. So 1, 2, 3, 4, 5. In which case, this might be a potentially very good entry point, and we would have, what do we have here? More than 200% upside for the next wave. Whereas picking the stop loss would be tricky because we also have like more than 50% downside. Yeah, so risk reward ratio not perfect, but the pattern seems to be nice to actually consider that this might mark the turnaround point. SunPower still waiting for, do something, poking it with a stick, and positive news. And with that, we can actually, NVIDIA we skipped, I think, today. So let's look at NVIDIA. Yeah, so we're looking at a daily chart. So we'll need another week or two to see if this actually is the finished correction and we go up, or if this is actually a fifth wave that will take us down here. Yeah, so another 40% down. SPY. Probably similar, although there we're looking at an 8-hour chart. Yeah, similar thing. Either this is the finished correction and we go up from here. I think we could feel safe if we break above 553.80. So then it's most likely that we'll get further push-ups, and the target area we can see here then in green. And probably in NASDAQ we have a similar pattern. Let's check. Yes, so similar, although here we would have to go above the 19,683 before we could feel safe. Yeah, and with that, I think we can call it a day. The most interesting stocks, in my opinion, short term for the next couple of weeks, probably GameStop. From the ones that I looked at, I mean, there are, I don't know how many, thousands or tens of thousands of companies listed worldwide. So the most promising, in my opinion, GameStop in the next couple of weeks, and for the next couple of months, Novavax. Yeah, there are others that also show potential in terms of bullish patterns, but their risk-reward ratio based on the labeling that I see is not that great. However, don't forget, I could be wrong. Don't bet your house based on what I say. Do your own research, as I told you in the beginning. And yeah, with that, we're going to call it a day. Thanks, Olga, and thanks, Akashi, for stopping by. Thanks, everyone that lurked. Yeah, hope to see you tomorrow around 5 minutes before market open. Again, reminder, don't forget, like, subscribe, and enable notifications. And then, yeah, have a great rest of the day, and see you then. Bye-bye.